My land business is falling apart. And in this video, I'm going to share with you guys all of the problems that are going on inside my land investing business today. If you guys are new here, my name is Sumner Healey. I run a business called landinvestor.co. We help people start, grow, and scale land investing businesses. And today, I'm going to get honest with you guys, right? I've been land investing since 2019, and there's still problems in my business every day, every week, every month, every quarter, every year. And I'm going to go through and break down the issues that we're having in our land business today. And the list is long. I think it's important to understand that no matter where you're at in your land investing business, there is still going to be friction, there's still going to be resistance, there's still going to be issues you need to push past. Yes, the problems change. Yes, potentially you have team members to kind of help work through some of those on your behalf. But ultimately, there's always going to be problems that we need to solve. I'm not immune to that. That still shows up in my life consistently. So I'm going to share with you guys the issues and kind of talk about what I'm doing to resolve them. So the first issue that we had is the beginning of January. Our acquisition manager, who was our only acquisition manager at the time, up and left. She missed a few days of work, didn't call in or notify, and then 3 days after being out, sent us her resignation and said, "Peace, I'm out of here." Long story as to why that is, but related to apparently family health issues. Now, I've been hiring almost exclusively overseas for years. If you guys know, we've got a pretty large team. Most of it's overseas, Philippines, Pakistan, but I've hired from South America, Central America, all over. I've been a really big proponent of hiring overseas. And I think especially for kind of getting from level 0 to 1 to 2 to 3 to 4, this is kind of the roadmap that you want to take. Now, one of the things that I've gleaned from the situation though is there is value to hiring here in the US, and there is value to paying up and kind of ponying up a bigger salary to have someone on your team that's kind of a grade A player. Now, one of the issues that I've seen as a recurring theme for hiring overseas is really high turnover, right? There's less accountability with them kind of showing up consistently. So we get a lot of slippage with people saying like the power's out or my family's sick or my dog died. And like you do miss probably for every employee on our team or most of the employees on our team that are overseas, they probably miss 10 to 20 days a year with little oddball events like that. Then we've also noticed that there is a pretty darn high turnover rate. Now, some of that could just be issues on our part for qualifying and hiring, but I really think that's more just kind of the nature of hiring overseas, right? Everything in life is going to have pros and cons. The pro for hiring overseas is you can find people that are really talented, they can do great work, and it's at a fraction of the cost of what you'd be paying here in the US, right? Our acquisition manager, while she was with us, brought in hundreds of thousands of dollars in gross profit to our business, and she was on track to make about 40K for the year. That's really, really good, right? In terms of just kind of like an ROI from that pay. And here in the US, that same position might run you 60K to 120K, all in with commission. But in our business, we've seen about 10% of our employees will last over 2 years for overseas hires. Now, we've got some folks that will most likely be with us for life. And we've had really, really amazing team members that we've hired. And I don't want to poo-poo the experience of hiring overseas, but it's something to be really mindful of when hiring overseas. Is that turnover is a real thing, and people just missing work for all sorts of different reasons is very real. I don't know how much of it is them being truthful or trying to take advantage of the situation. It seems odd to me that almost every person on my team every year has crazy, weird life situations coming up, but maybe that's just a virtue of having a large team. I don't know. So one of the things that we've been doing is we hired a new acquisition manager who's in Mexico. We brought on a new acquisition manager who's here in the US. Now, one of the reasons that we're kind of doubling down on a US hire is that what we noticed is when our acquisition manager left, just having someone not in that role for 2 weeks cost us a ton of lost revenue. Was really a big hit to our business for starting out the year. And so I've noticed that bringing someone here in the US, and I think that again, they'll probably be able to be a little bit better on the acquisition side. We're directing this hire to really work on bigger subdivided projects, bigger deals. And those are longer sales cycles, more complex deals, and I think they'll do a better job than what we're seeing with some of our overseas talent. But more than anything, it's the dependability, right? It's the fact that these people show up, they communicate, in my experience, a lot better. And I think you have less of a turnover issue. Now, turnover is always a problem for any kind of hiring operation, but I think it's more severe hiring overseas. So we're doubling down and kind of ponying up to have someone here in the US because we don't want to have that gap that we had before. And I think looking back at it, the way I would have liked to handle that is having some kind of redundancy on our team by having 2 acquisition managers, which is what we've done, right? Now we have 2 acquisition managers, so if one is sick, we still have someone covering those leads, or if someone leaves, we still have that contingency plan. Now, I was really fortunate to have spent the last few years building a big pipeline of candidates. I am always adding new candidates to my hiring pipeline for almost every single role in my business because I'm aware that turnover is a real thing. And so luckily I already had a candidate in my pipeline. We were able to get him placed in about 2 weeks, but it was still a big blow to the business in terms of lost revenue. It was also emotionally a big blow, and I wish that wasn't the case, and maybe I'm being too soft, but I had invested so much into this gal, had paid for outside training, had really gone above and beyond to give her a really good situation working with us. And we were just ramping up with her to like the 6 or 7 month mark. She hadn't even been with us for a full year. And to see kind of all that investment go towards absolutely nothing was pretty unfortunate. Now, the way I've rationalized that though is if I go and break down her pay over the 6 months versus what she brought in, it's still a huge ROI to the business. And so the math still pencils. It's just you as the operator have to be prepared for the fact that you need some kind of redundancy or contingency plan because these employees will turn over. And for a role like acquisition manager, you need someone to kind of pick up the slack. And so really good learning lesson for us. The last issue that we've been running into in our business is really the last 6 months we've been putting a lot of our marketing efforts towards subdivides, both for our texting and for our direct mail operations. I would say about 80% of all of our efforts there have gone towards subdivides. We have a really big pipeline of subdivide deals, some stuff that's like teetering on the brink, but we haven't seen any of the fruits from our labor yet, right? We haven't gone full cycle on one. We haven't had any deals sell. And so that's a bit defeating. It's a tough thing to kind of come to terms with, that we spent tens of thousands of dollars in marketing over the last 6 months and haven't had much to show for it. Now, I'm not losing faith. I know that this is part of the process. And the way I'm looking at this is, even though the timelines are way slower, the sales cycles are way slower, from a ROAS perspective, I still think these deals actually beat out our bread and butter deals, right? I always talk about how our baseline kind of bread and butter land flips, they usually net us about 10x to 15x ROAS, return on ad spend. With these deals, we might invest 30 or 40 grand into marketing to get a singular deal, but the deals that we have in our pipeline will net us over 7 figures. So from a ROAS perspective, these deals actually have higher returns. It's just kind of coming to grips with the fact that the sales cycles are really slow, really long here. But the negative side effect has been we've been pouring so much of our attention there that we've kind of lost eye on the ball for our bread and butter deals. And so our pipeline on the bread and butter flips has come down a substantial amount, right? Our volume on acquisitions has really fallen off the map, right? When we look at December, this was partially deliberately because we had pulled back our marketing for the holiday season, so we weren't really sending any mail for November and December. We actually had 0 acquisitions in December, which was kind of a weird hit for us just because we were, acquiring 300 to 500K a month in new land acquisitions. We're really, I guess 200K to 400K is probably more realistic of new land acquisitions every month. Now things are picking up. We've got some really good deals in our pipeline, but we've had to rebuild that pipeline almost from scratch because the last few months I've pulled back, one, for the holidays, but also because I've redirected our marketing spend and our team's time to go after these subdivide deals. Now you might be saying, Sumner, well, why didn't you just send mail to the bread and butter flips and mail to the subdivide flips? It's not necessarily a bottleneck of capital, it's a bottleneck of human resources. If you're a land investor who's looking to start, grow, and scale a land investing business, I want to talk to you. At the link down below, you can click to book a call with my team and I. We're going to go through a strategy roadmap with you to build out your land investing business. Whether you're just getting started or you've been in the game and you're looking to get to the next level, come and talk to us. I want to speak with you. I'll see you on the call. Because we didn't have enough on the acquisition front and kind of the lead intake front, we couldn't manage all the subdivide leads and all of the kind of bread and butter standard flips that we were doing. We didn't have enough infrastructure or team in place, and so that's why we brought on 2 acquisition managers. So we have one that's solely focusing on subdivides and one that's solely focusing kind of on our bread and butter deals. And now that we're doing this, we are really opening ourselves up to be able to spend more on marketing and handle all of that lead flow. So it wasn't necessarily not having the capital for marketing or not even having the foresight that this was going to be a problem. It was more of not having the human resources or the infrastructure in place to take that on. This video brought to you by Zevia. No, just kidding. Zevia does not sponsor this, but I'm addicted to Zevia. So on the third front, we're in this awkward no man's land for our capital raise. So coming into 2023, one of our big goals that we've been working on for the previous quarter was doing a big raise of debt. We were going to raise debt through promissory notes. We were going to start with about $500,000, then kind of work our way up to 7 figures and beyond. And that was going to be our main kind of funding strategy, right? Raising debt at 10 points, 15 points, somewhere in that range was going to save us a ton of capital because we the year prior had spent so much on joint venture deals, and so that was really the big push for us. We had a lot of trepidation though, just because Q4 of 2022, the market was softening. We didn't really know what was going to come next. And I didn't want to overload us with debt that we weren't going to be able to deploy. And so we put the pause on that. Now we've seen enough positive indications this year that we are going to be raising debt. We're going to be doing it at a smaller point than we were initially outlining. And so we'll probably start around a couple $100,000 and then inch our way up from there. But that put us in a really awkward starting point for the year, just because we were kind of in this weird spot of not having all the capital that we wanted or not having cheap enough capital like we had outlined, but we also didn't really have the pipeline for it. So it was a blessing in disguise, but that's put us behind the 8 ball for our capital raise. And in fact, we're going to be starting with less than what we had indicated. And so that was a bit of an awkward situation where we were gung-ho. We had the capital kind of in process of being raised in Q4. Then we come into the new year, like, whoa, kind of pulling the reins back on that. And so we've been doing more joint venture and even some internal funding for these deals and some new funding strategies that we're working on as well it's a long story, but some new funding strategies. So that was an awkward situation. Now we're reinvigorating that effort and we're going to be starting at a lower amount and then kind of raising up from there. The next problem that we've run into our business recently is 3 really bad acquisitions out in Arizona. These 3 infill lots, they're somewhere between rural infill. They're more like rural infill, but I would qualify them closer to infill lots. This market was on fire. It was doing amazing in 2022. And what we saw is we were getting a ton of interest in these deals. We bought one of these deals. We're like, well, this deal's getting a ton of leads. So we bought 2 more deals, and these deals have not panned out to be what we thought they were going to be. And this is a good reminder of really like being mindful of when you're stepping out of your area of expertise, right? For us, rural rec is really our specialty. And so we tried to get cute and try something different. That's fine. I think it's okay to take risks and pilot new projects in your business. But I think I poured too much capital into these deals, multiple 6 figures or close to multiple 6 figures, that I should not have kind of earmarked for these deals. And so now we sold one of these deals last week. We bought it at 51. We're selling it for 66. Initially, this deal looked like we were going to sell it for like 120 to 150. The numbers were very similar for the rest of the deals. And so we've run into some issues with them. One, we had a bunch of interest in 2022. And then these were all going to be for kind of like new home construction. So the new home builders, they pressed pause, they weren't building anymore. Then we had just like standard buyers who were coming to us that wanted to buy them, but then their lending got pulled out from the lenders who didn't want to lend on it anymore. And so it's just been this really awkward process where we've had a lot of false starts. People that look like they were going to buy them, they back out, they back out, they back out. 2 of the deals had wells on them. So one of them, the well doesn't work anymore. It's not producing. And the other one, the well has like arsenic in it. Stuff that we didn't get tested on the front end. And we'll still make some money on these deals. But ultimately, it was just a huge waste of time. It's not even so much about the opportunity cost of capital. It was how much time my team has poured into these deals. I mean, we've talked to hundreds of buyers, hundreds of realtors. We've had these go under contract multiple times and back out. It's just been a real pain in the butt. And so it's been a good reminder of like, don't outline so much capital for areas that are not in your wheelhouse. Really should have just directed that capital to what we do best and maybe started with 1 of those deals instead of buying 3 of those deals. And I got way too excited when I saw the potential of the numbers in these deals, and just how much interest was coming in for these deals was a big mistake. The last problem that we're seeing right now is we've got a big sale, a really good deal that the buyer is using third-party financing for. It was supposed to close at the beginning of January. It's now February 19th. The deal still hasn't closed, and there's really no indication of when it's going to close. The bank has been an absolute nightmare to work with. They've done 0 to be of assistance. The buyer doesn't know what's going on, and we want to get the deal done with him, but it just keeps on getting kicked down the road. We've got a partner on it. It's been a real pain in the butt, a real kind of unpredictable situation. Now, we've only sold maybe 1 or 2 deals with third-party financing before through a bank, and so this was one of the very few deals that we've done this route, and they've been smooth in the past, but this one has been a real pain in the butt. So it's been just kind of a question of like, do we let this deal play out and make sure this buyer gets the deal done, or do we wash our hands of it and start over anew? I don't really know what the game plan is here on this one, to be honest. I think we'll probably let the deal play out, try to get the buyer to get this deal because we know he really wants it. He's been working hard to get it done. The bank has just been zero assistance. They've done nothing to help us throughout this process. And that's been a bit aggravating. So as you guys can tell, I am not immune to problems. No one in the land business is immune to problems. If anyone tells you they're immune to problems, they're most likely full of it. And so this is really to set expectations that at every single level that you're going up into this business, they say new levels, new devils, right? The problems get bigger, the problems become more substantial, and that's okay. You're still going to have problems that are reoccurring. You're never going to get away from that. And I just thought this was a good reminder that I am fallible. I still make mistakes. There's many problems that I deal with daily, but I keep my chin up. I keep on working through them. I keep a positive attitude that I know I can accomplish them, and I just keep on chugging along. That's what I recommend you do as well. Hope you guys like this video. I'll see you in the next one.